I would say the biggest impact for us in ag is that it's been a short-term nuisance, and we've kind of lost track of our export sales. Now, that'll be remedied on Friday. USDA is going to dump out about 3 weeks worth of export sales data for us that we'll try to catch up quickly on. But long term, I don't think we'll see any negative impacts to this. We caught up on our WASDE report. We caught up on our December 1 grain stocks report. So hopefully we can continue on more as normal now.
And Todd, we've been hearing about the national emergency the president has declared. This is something past presidents have done. This one's a little different though, because it doesn't deal with export restrictions or sanctions. It's to help build the wall. So do you see any agricultural impacts with this latest national emergency?
I guess on this particular topic, I don't, other than subsidizing lawyers. It sounds like there's going to be a lot of lawsuits around the issues, but thankfully it's not restricting our exports in any way that I'm aware of. So I think in terms of ag, we're okay on this front.
So as we record this, we've got March 1st as the deadline for getting the new trade deal with China. Could you remind us what that means if we don't reach a deal by then?
Yes. Now, the news is changing on that a little bit day by day. And just very recently, President Trump said, well, it's not a hard and fast March 1st deadline now, suggesting that perhaps there's some give if there is some actual progress going on with the talks with China. So that's a little bit encouraging that they're at least to be a little bit flexible if some good news is happening on the negotiation front. As far as what does it mean to our grains, and especially the big impact on soybeans, we cannot underestimate the need for China to be a willing participant in our markets. It's without them, we're looking at a possibility of $6 or $6.50 price on a cash soybeans, which is horrible to think about, and I honestly hope we don't get there. But it's quite possible, considering the types of ending stocks that we could accumulate if China's not a willing buyer of our markets.
Yeah, and there was the 800,000 metric tons of U.S. soybeans that China said they'd buy, then they backed out on that. So what's your take on that? Do you think China's just playing hardball? Are you concerned here? What do you think?
Well, I would say producers and all of us have long heard or learned to take talk lightly, and it all comes down to shipments, and that's what we really want to keep our focus on. And so far, the shipments just aren't there. They're not keeping a good pace this year.
And I've been seeing where there have been some big swings in the wheat market. What's happening here?
Yeah, I think this is just a matter of last year we had a semi-bullish run in wheat prices. We had lower world wheat production, and that helped give our wheat prices a lift in 2018. For a long time we held that this winter, but I think they're finally starting to give up on that as we start to look ahead at the new crop, and we're looking at bigger estimates ahead for Europe and the other major wheat growers in the world. So the early outlook is bearish, but here in February there's so much we don't know, and who knows how weather will play out.
And what about corn right now? Do you think it's getting pulled down too, along with soybeans and wheat?
Yeah, it's just very tough to be anything grain related this week. I think corn still has the best story of the three major grains. The export activity is still holding up fairly well, and should continue to do so. One of the tough things that's hitting the corn market now, though, is that the weather pattern has changed probably in the last couple weeks for South America, and their crops are looking much more favorable. There's rain in the forecast this week for Brazil. So we're going to have some more competition in corn exports next year. Last year, both Brazil and Argentina's corn crops got hit by dry weather, and that really helped our export activity the past several months. Unfortunately, I don't see that going forward, as both Brazil and Argentina are going to have big rebounds in their corn production. So, typically Brazil starts shipping corn about July, and that's probably when we'll start to feel a little more pressure on our corn price.
Any other impacts the U.S. could see from that?
Well, it's always an export battle. I would like to mention that because Brazil's soybean crop is down a little bit due to dry weather this year, USDA is expecting a pretty healthy drop in Brazil's soybean exports. So if there is good news on the soybean front, it is that we do have a little more room to do some export business. But of course, we have to get this hurdle out of the way with China.
And Todd, any final thoughts or advice before we let you go?
Overall, to be honest, I think we're looking at a tough year. Our weather forecasts so far look like they're going to be favorable again in 2019. That'll be the 7th consecutive year of good or good enough weather that gives us big crops, and that's always a tough price environment for our grain market. So if you have any ability to take some price protection now, I think it's very good to consider that, and it could be a very tough price outlook for this coming fall if that good weather scenario does come through.